Stocks at about 203. The market, by the way, has come off just a little bit more from the time that we started. We were down around 100, 125 down now, 19,685, just under the 20-day for the Nifty, and actually coming down to the 19,650 level, which is the 40-day exponential. Trideep Bhattacharya is with us. He's Chief Investment Officer Equities at Edelweiss Asset Management Company. Trideep, good to have you with us here. It's a overall red kind of a day, lots of red all across.
Thanks for having me.
Afternoon. Results are coming through thick and fast. We just got polycap numbers which were better than expected, pretty much on all fronts. The one constant disappointment in Q2 has of course been IT services, as Rima was also telling us. It's too early, but anything out of the ordinary to your mind? Anything, any number would surprise you, a stock you have in your portfolio?
I think by and large, my read of IT result season will probably get done by the end of this week. So most of the results are in, a few remaining which will get done the next few days. The way I read the numbers are as follows. Basically, deal signings are still happening, but execution is meaningfully weak, which is why if you look at the TCV numbers of various companies that have reported, they have held down okay, but when they are talking about full year numbers, they are kind of cutting the guidance to indicate that the execution has been weak. So the intent has not gone away, but given how the macro is stacking up, the execution is quite weak. That's the second point that I would make. Third, I think, quite frankly, over the last 2 or 3 months, whether it's mid-cap IT or mid-caps in general, have probably rallied a bit ahead of themselves, which is kind of, finding its ground, backed by fundamentals as the result come by. So as a mix of these two, I think overall, nothing alarming to say that things would kind of really fall off the cliff. But at the same time, it just goes on to show that it's bouncing around the bottom. I think it'll take probably 1 or 2 quarters before the bottom is struck with regards to earnings estimates. And I think that's when that's when I think stocks and investors are looking forward to anchor around before it starts moving in the right direction. So that's how I would kind of summarize my understanding of the IT results so far.
All right. Trideep, just hold on to that thought. We're getting some comments coming in from Orient Cement on the wires. They say that they're not privy to any kind of discussions. Now, they're clarifying on this morning's media reports which suggested that they're likely to deal with Adani. So they're saying that, in fact, they're not privy to any kind of discussion as of now. Remember, in the past as well, we have heard this, a few months ago. And at that point of time as well, they'd come out with this clarification that, there was no truth at that point of time, and they were not privy to any kind of this discussion. The stock has been undervalued, but on this report itself, that's an important clarification that's coming in there from Orient Cement. Time will tell whether or not there is a deal in the making or not. But Trideep, since we're addressing cement stocks, what's your view on a couple of these smaller names? The street is waiting by for some kind of consolidation. How do you all position yourself? Will you all stick to the big boys because the big are getting bigger, or some of these smaller companies could get lapped up? Your take?
My sense is the sector is going through a bit of a rejig. Less so has happened so far. More lies in front of us. When I say that our owners are changing hands, so capacity is changing hands on net balance, and by virtue of which, as you said, it is better to be in the consolidators rather than people who are getting bought out, because eventually those are the guys who would benefit. But having said that, in this process, if one of the players get a little more aggressive with regards to capacity expansion, that might mean a bit of pricing weakness to come through. For the moment, we don't assume that. For the moment, we would be probably overweight, marginally overweight though, the cement sector, because cyclically speaking, we think that capital creation is well on its way in India. And as part of that, cement would actually stand to benefit. But this sectoral dynamic is probably keeping us from going meaningfully overweight from where we are.
Okay, so a bit cautious on cement. Trideep, hi, good afternoon.
Hi.
So what's top of mind now? I think we're seeing this whole PSU rally play out, and don't know if it's now coming into some sort of a consolidation patch or not. What is it that you have your eye on at the moment?
I think basically, if you look at the result season so far, companies who have overseas earnings have come and lowered their numbers, if you really look at it. Whether it was a pharma company or, for that matter, some of the IT services companies, people who are exposed to the globe, have taken their numbers down is a sign of global macro weakness, and more so after the geopolitical tensions that are coming about. So in this, our initial stance has been to bet on domestic earnings. That probably doesn't change. What we are kind of incrementally eyeing on is that where things have sort of gone on to the excess, for example, in some aspects in auto or auto hangs, while the numbers are going to be good, overall, are there any pockets which are worth interesting and looking at is one area that we are interested in. Also, given that in the consumer side, or particularly on the aspirational consumer side, we have World Cup and a few other events lined up where companies exposed to those segments could do a little bit better than what people anticipate. That could be the second area. So these are the two areas, broadly speaking, or two or three areas that we are kind of feeling our way into the market or out, depending on what the case might be.
Trideep, I believe in one of your funds you hold Syngene in the mid-cap fund?
Yes, we do.
Okay. And what did you make of the numbers, the cut in guidance? And is the fall... Yeah, go ahead.
Go ahead.
No, just wanted to ask that, since the stock has fallen today on the back of negative news, is this an attractive entry point, or do you think what they've said in the Q2 number is a shift in the thesis that you have, and therefore you would avoid it and wait to see how it plays out?
So I think obviously we can't make stock-specific comments, but I would say that, as I was said early, that some of the companies which are exposed to global earnings or global sort of dynamics have cut their numbers overall. And I think what we are encouraged with or standing by is that the fundamentals of the business are kind of fairly strong, whether it is deal making or kind of funding for certain areas of their business might have kind of taken a bit of a knock in the near term, given where the macro conditions are. We think that overall some of these areas would actually stand to come back. So I think that's our reading at the moment with regards to the global earnings where we are exposed to. But if you look at our overall portfolio positioning, we would be overweight domestic earnings and underweight overseas earnings. On net balance at portfolio level, that's what's probably helping us today and in times like this.
Okay, all right, Trideep, thanks so much for stopping by and filling us in with all of those views on the market. Wish you well, have a good evening, and look forward to having a chat with you rather soon. Well, the markets actually have